Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about Tesla. Why I personally think the stock is overvalued. Now just to get this out there, I do have 4 shares of the company. I did get in at around $500 per share. So yes, I may be a little biased on some of the things because I'm a huge Tesla fan and a huge Elon Musk fan. But honestly, the stock price is too high. Just like Elon Musk tweeted a couple days ago, the stock price is too high. So we're gonna be breaking down why I think that, what that means for you guys, should you invest in this company. So now, I hope you guys enjoy it. If you guys get anything in value out of this video, please repay me with a huge like, it's greatly appreciated. And subscribe to the channel if you guys aren't already. So now, let's jump into it, roll the intro, check out my blog, roll the intro, let's go. Bam! Now for those of you that don't know what Tesla is, you guys must be living under a rock, but Tesla is a electric car manufacturer that specializes in autonomous driving, and they are one of the front runners in the electric auto space. They have a market cap of over $400 billion. And you might be asking yourself, well Carter, they must have a ton of revenue. Yeah, they have about $6 billion worth, but only $108 million of that is net profit. So that brings the overall margin to about 1%. So really what that means, for every $100 that Tesla pulls in, they only profit about $1 of that. And yes, that is not very good. That's, you know, if you compare that to another company like Visa keeps their expenses extremely low and their margins over 50%. So for every $100 they pull in, they keep $52 of that, which is absolutely crazy. So now, yes, they do have a extremely large market cap. They do have low margins. They do have not the greatest revenue. But Carter, what is the price to earnings? Because the price to earnings really tells if a stock is overvalued or if it's kind of undervalued. You know, me personally, I like to invest in companies that have a price to earnings around 25 to about 50 if they're growth stocks, if not more a little bit. You know, I'm very flexible with my price to earnings, but this, guys, this is over 1,000 price to earnings, which is nuts, really stating that this stock is pretty overvalued from the sales, earnings, and a lot of other things. Now, why a lot of people are investing in Tesla, the very first reason is the 5-to-1 split. Tesla is doing a 5-to-1 stock split, which is making the overall stock price just absolutely getting hammered up. Everybody's wanting to buy into it before the split. But honestly, for investors, this really doesn't change anything. If you guys were believers in it, you know, a couple months ago, this split does not affect you at all. Right now, people are getting into this stock due to one thing, due to one emotion, due to one thing called FOMO, fear of missing out. They missed out on the opportunity from this stock to go to $500 to $1,000. Now they're missing out on another opportunity of the stock split, which is making the stock overall go extremely high in price and really overvalued. Now, yes, I do think that Tesla is the absolute best car manufacturer out there. The only thing is their revenue doesn't match the market cap. Their margin is extremely low. They're just not doing the very best fundamentals. But the company is great. I love it. The cars look great. Everything about it is good. So now here's what we're going to do. Now that we talked about the fundamentals, let's go ahead and look at the technicals. So this is going to be all the price action, stuff like that, support, resistance. I hope you guys enjoy it. Let's go. Alrighty guys, so we have ticker symbol TSLA. This is the one and only Tesla. So you guys can see that this stock was really trading in between, you know, $300 and about $900 for a little bit here, for actually a couple of months. But then we just had an extreme buying pressure. The stock went from about $1,000 all the way up to about $1,700 before it kind of sold off here. Now it kind of flagged out, consolidated down, hit some support. This is really when they announced the overall 5-to-1 stock split, and then the stock really rallied another 40 or 50% in a matter of a couple of weeks. And now we're getting to this point where it's just the stock price doesn't match the fundamentals, it doesn't match the chart, it's just overall not the greatest. You know, we had this trend line down in here, which kind of made sense. You know, we marked out some of the highs, but now if we continue to draw that, look at this. It doesn't make sense. You know, we're breaking out of multiple resistance levels, really overvalued on the RSI, which is the relative strength index. This determines if a stock's overvalued, overbought. This is a pure momentum indicator that a lot of investors use to kind of get a good gauge on the stock. You know, if it crosses over a 70, this is kind of stating that the stock is overvalued. And if it falls below a 30, like it did down in here, that's why we got buying pressure. This is stating that the stock is undervalued. So a lot of people love this indicator. And now just looking at this, it's at a 75. So just like we had it in here, where we kind of consolidated down, I do think that's exactly what we're going to get now. I think we're going to get a lot of investors start to realize, hey, this company doesn't make sense. It's just a big bubble right now. Everyone's just into this stock because of the emotion out in the market. Very similar to the dot-com bubble. You know, the dot-com bubble is the same thing. Everybody was scared and they didn't want to miss out on this opportunity. The internet, they didn't want to miss out on an opportunity, which made Amazon stock fall from $60 all the way to $3 in literally like 2 days, which was nuts. And the thing about it is Amazon's numbers behind it made sense. This stock right here, the numbers don't match the market cap, don't match the stock price. And yeah, that's why we did get some selling pressure today. I do think that's going to continue tomorrow and continue to at least about $1,800 to about $1,500. I could definitely see that, but here's the thing. I am a huge Tesla fan. I'm in it for the long haul. So as investors, is this something to be worried about? No. How would you go about investing into this? If you guys want to invest, use the strategy called dollar cost averaging. I think it's the absolute best strategy for beginners, the absolute best strategy to get an average price, just the overall best way to invest your money. So really what dollar cost averaging is, it's very simple. Imagine if you guys had $10,000 to invest. Instead of dumping $10,000 at 2014, what you guys are going to do is you might buy a share every month for the next 5 months. So really what this is going to do is it's going to overall average out your price. So if let's say this continues to go up, you're buying when it's going up, so you're making money. And now if it falls down in here like it did here, you guys are buying in here, and then when it goes up, you guys make money. It's just an overall best way to get a good average price on the stock. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Take care. Bye.